Alright, what is up, you degens? Back for another YouTube video. Hope you're staying sexy. It's been a little bit. Been working on a few things. Got a new website up, dgendaytrader.com. Go check it out. Got a podcast that we started, the Day Trading Diaries, which is on Spotify and iTunes and pretty much anywhere that you can listen to a podcast. So definitely go check that out. But today we are actually talking about why I swung 650 Tesla puts after the FOMC. So we're going to get into that because everyone thought I was crazy, but we're going to talk about how I set it up with the Golden Goose and supply and demand and what my thought process was. Hopefully it'll be a good video, quick video. Hope you enjoy it. Check it out. Also, check out the new merch. Pretty fire. Not bad. Definitely check it out. It's on the site. All right, let's get into it. This is Tesla, the 30-minute time frame for the last few days, last 5 to 10 days here. And what I've been doing recently has been basically putting together a few things, which is working on Elliott waves a little bit for more of the psychology of it and the psychology of trading. I've really been trying to focus in and really perfect the Golden Goose and supply and demand and adding those as kind of the primary ways and reasons why I trade. Obviously, with the Golden Goose and what my strategy has been is taking a look at the most recent, big extreme move that I've been seeing and looking at. So, which has been and was, before FOMC, which was yesterday here in this area. But I've had these since last week. But then what I decided to do also was start adding zones. And so what I do when I'm looking for zones is basically look for any big move or extreme move after some consolidation. It just gives another level of confluence and confidence, and especially because I normally put and make zones on a higher time frame, so that I can actually use that as more of a long-term price target. Now going down to a little bit more of the smaller time frame here, so that we can look at the FOMC. Really focusing on is this area right up until the actual FOMC and where they decided they were doing the rate hikes up to 75 basis points. Now, people are going to have their ideas or their theories on if it was already priced in, which is why we moved up, and then you're going to have these extreme moves after the FOMC. But the one thing I want to show is that when you do this and you compare this to the overall volume relative to the rest of the day, this was a steady climb up here on relatively low volume, leading up to the FOMC. Now, to me, what that suggests is that there is not a lot of confidence in this move up. There's not a lot of conviction. And when I originally took the 650 puts was actually right here, right after the FOMC, when it touched this fib line, the 692, and rejected hard. I took it at this point, and you'll see it immediately afterwards just shut up. It was crazy price action, but I held overnight. I did. I swung puts overnight for the reason being, a part of it being the steady rise in price with low volume relative to the rest of the day. But then you got and saw a lot of resistance, one, in a zone that I had. Two, it was also right around these golden pocket Fibonacci levels on the golden goose. I felt like there was going to be some type of retrace. Now, this is where it gets into the psychology of it. I originally had, this was a part of a wave to the upside of a wave, a 5 wave to the downside. My thought process was, if the market makers kind of had a hint that it was going to put in the 75 basis points, they've already had positions in place that either they are going to try and force out stop losses if they are in a short position so that they can make a bigger spread, or they are trying to pump the market up to get out of their own long positions before it comes down. So this, after the FOMC, to me was a long-term play to either get people out of stop losses or get themselves out of long positions before a potential pullback. So when we got down here, still we had quite a ways to go. But my target was when it got down to literally another zone that I had, and then it started the day right here and kept rejecting this zone and coming down, and then it came back down underneath the fib levels, and then golden pocket got rejected again. My target was 642, and I literally got down right here. I got down right here out where we did obviously well. Made some good money. And I also then, because of this resistance here in this area, I felt like we were also going to see a move up, which we didn't. But once we got some more support here and rallying towards the end of the day, I think this is where we're going to see a little bit of consolidation, but a potential wave 4 to the upside, maybe an ABC hitting the 650, 660 range tomorrow. So I swung 845 calls going into tomorrow. So that's kind of my thought process on it throughout the week and what I did it. Sometimes it's good, sometimes it's not. I had some good conviction this time. I'd also rather be lucky than good. So I appreciate you watching. If you got any questions, like the video, put some comments in there, subscribe, check out the website, dgendaytrader.com, Day Trading Diaries podcast. Let's go. Stay sexy out there, all right?